Imagine turning just $500 into a stake in two of the most exciting growth stories on the market. Today, I'll reveal the companies leading the AI revolution and transforming how the world learns. Plus, why they could be the smartest additions to your portfolio. Hit like, share your thoughts in the comments, and subscribe so you never miss a key investing update. This video is sponsored by Value Stocks Investing Mastercourse. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Mastercourse to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Let's dive in. In today's rapidly evolving tech landscape, there are a handful of companies that are not just riding the AI wave. They're building the very foundation that makes this revolution possible. If you're looking for a way to invest in the future, you need to know about the companies powering the AI infrastructure behind the scenes. The first company on our radar is Supermicro Computer, ticker symbol SMCI, a name that's quickly becoming synonymous with the backbone of artificial intelligence. If you're a serious tech investor, or even just curious about the companies shaping tomorrow, Supermicro is a name you can't afford to ignore. Supermicro sits at the very core of the AI boom, designing and building high-performance servers that are the workhorses of modern computing. These aren't just any servers, they're the powerful machines that enable everything from advanced machine learning algorithms to the vast cloud computing networks that keep our digital world running 24/7. While NVIDIA is famous for creating the brains of AI, the cutting-edge chips that process massive amounts of data, Supermicro is the company that builds the body. They engineer the custom systems, racks, and enclosures that allow those chips to operate at peak performance, unleashing their full potential in real-world applications. What sets Supermicro apart is their modular, building block approach to server design. This means they can rapidly deliver tailored solutions for customers, whether it's a startup training a new AI model or a Fortune 500 company scaling up its cloud infrastructure. Their agility and speed to market have made them the go-to partner for organizations racing to deploy AI at scale. A key advantage for Supermicro is their close, strategic partnership with NVIDIA. This relationship gives them early access to the latest AI chips, allowing them to co-engineer systems that are optimized from day one. It's a collaboration that ensures Supermicro's products are always at the cutting edge of performance and efficiency. This synergy with NVIDIA creates a powerful moat, a competitive advantage that's incredibly tough for rivals to replicate. It's not just about having the best hardware, it's about having the right partnerships, the right expertise, and the ability to move faster than anyone else in the industry. The financial results speak for themselves. Supermicro's revenue is not just growing, it's doubling, even tripling year over year. Quarter after quarter, they're smashing analyst expectations, delivering the kind of growth numbers that most companies can only dream of. Demand for their products is so intense that Supermicro is actually supply constrained. They're selling every server they can make, and the backlog of orders just keeps growing. This isn't a short-term spike, it's a sign of sustained, long-term demand for the infrastructure that powers AI. To keep up, Supermicro is rapidly expanding its manufacturing footprint, both in the United States and overseas. New factories, new assembly lines, and new investments in capacity all signal management's deep confidence in the future of AI and their role at the center of it. Some skeptics worry that the stock's meteoric rise means the best days are behind it. But if you zoom out, we're still in the early innings of the AI revolution. The technology is just beginning to reshape industries from healthcare to finance, and the demand for AI infrastructure is only going to accelerate. Industry analysts project that the market for AI servers will explode into the hundreds of billions of dollars over the next decade. Supermicro, with its head start and deep expertise, is perfectly positioned to capture a massive share of this growth. Even after its impressive run-up, SMCI's valuation remains surprisingly reasonable compared to other high-growth tech stocks. While some companies trade at sky-high multiples, Supermicro offers a rare combination of explosive growth and sensible pricing. This is what investors call growth at a reasonable price. You get the upside potential of a market leader without having to pay a fortune for the privilege. It's a sweet spot that's increasingly hard to find in today's overheated tech sector. At the helm is founder and CEO Charles Liang, a true hands-on visionary. Liang isn't just a figurehead, he's deeply involved in the company's day-to-day operations and still owns a significant personal stake. His leadership and commitment have been instrumental in driving Supermicro's relentless innovation. History shows that founder-led companies often outperform over the long term. There's a unique drive and passion that comes from having the original visionary still at the wheel, and Supermicro is a textbook example of this dynamic in action. But it's not just about speed and power. Supermicro is also a leader in green computing, designing energy-efficient servers that help customers save money and reduce their environmental footprint. As data centers become some of the world's biggest energy consumers, this focus on sustainability is a major selling point. Their commitment to efficiency isn't just good for the planet, it's good for business. As companies face rising energy costs and increasing pressure to meet environmental goals, Supermicro's solutions are more attractive than ever. Supermicro's influence is now global, with their servers powering critical infrastructure in government, research, and enterprise sectors around the world. Their reach extends far beyond Silicon Valley, touching nearly every industry that relies on data and computation. Put it all together, a leader in a massive growth market with a technological edge, key partnerships, founder-led vision, and financials on fire. Supermicro is firing on all cylinders and the story is just getting started. Of course, no investment is without risks. The stock is volatile and it's sensitive to every twist and turn in the tech sector. Headlines can send shares swinging, and rapid growth always comes with growing pains. Competition is fierce, with giants like Dell and HP Enterprise constantly innovating and fighting for market share. The server market is crowded and staying ahead requires relentless innovation and execution. But so far, Supermicro's speed, customization, and engineering prowess have kept them ahead of the pack. Their ability to deliver exactly what customers need faster than anyone else is a huge advantage in a market that rewards agility. With a market capitalization of $32.27 billion, the company has established a strong foothold in the high-performance server and storage solutions space. For 2024, Supermicro generated a remarkable $14.94 billion in revenue, demonstrating the scale and demand for its data center products. Their net income reached $1.21 billion, supported by an earnings per share of $2.04. With a price-to-earnings ratio of 26.70, investors appear to view the company as a balanced mix of growth and value, particularly within the broader AI and cloud infrastructure boom. For long-term investors, the potential reward far outweighs the risks. If you believe in the future of AI, Supermicro offers a way to participate in the growth of the entire ecosystem, not just a single application or trend. Buying SMCI is a direct investment in the infrastructure of artificial intelligence. Every new breakthrough, every new application, every new AI startup needs the kind of high-performance servers that Supermicro provides. You don't have to pick the winning AI software or guess which application will dominate. By owning Supermicro, you're investing in the essential tools, the picks and shovels, that every AI company needs to succeed. It's the classic picks and shovels play for the AI gold rush. Just as those who supplied tools during the original gold rush often profited more than the miners themselves, Supermicro stands to benefit from every stage of the AI revolution. With just part of your $500, you can own a piece of this incredible growth story. It's a chance to invest in the infrastructure of tomorrow today. Next, let's look at a company transforming education for millions. Our second stock pick is Duolingo, ticker symbol DUOL. A company that's not just changing how we learn but making the process so engaging, it feels more like playing your favorite game than sitting in a classroom. Duolingo's mission is simple yet ambitious: to make high-quality education accessible, enjoyable, and effective for everyone, everywhere. In a world where attention spans are shrinking and distractions are everywhere, Duolingo has managed to capture the imagination of millions by turning learning into an experience people actually look forward to. At its core, Duolingo transformed language learning from a tedious chore into a daily habit that feels like a game. The app's clever use of points, streaks, badges, and leaderboards taps into our natural desire for achievement and competition. Every lesson completed, every streak maintained, and every badge earned gives users a sense of progress and accomplishment. This gamified approach is so effective that people often find themselves coming back day after day, not because they have to, but because they want to. It's a masterclass in behavioral design, and it's why Duolingo has become a household name in education technology. One of Duolingo's biggest strengths is its freemium model. Anyone, anywhere in the world, can start learning a new language for free. This open access approach has helped Duolingo build a massive global user base, over 80 million monthly active users and counting. The app's friendly green owl mascot is instantly recognizable, and the brand has become synonymous with fun, accessible learning. By removing barriers to entry, Duolingo has democratized language education, reaching people from all walks of life, from students and travelers to professionals and retirees. But here's where the real magic happens. While anyone can use Duolingo for free, a growing share of users are choosing to upgrade to Super Duolingo, the company's premium subscription. Super Duolingo unlocks extra features like unlimited hearts, personalized practice, and an ad-free experience. For many, these perks are worth the price, especially as they become more invested in their learning journey. This premium tier not only enhances the user experience, but also provides Duolingo with a steady stream of high-margin recurring revenue. The free app acts as a powerful funnel, introducing millions to the platform and then converting a significant portion into paying subscribers. This model is incredibly efficient. Duolingo doesn't need to spend huge sums on marketing to acquire new users. Instead, the product itself does the heavy lifting, drawing people in and encouraging them to upgrade as they progress. It's a textbook example of product-led growth, and it's one of the reasons Duolingo's business is so robust. What's even more impressive is that the number of paid subscribers is growing even faster than the overall user base. This means that not only are more people discovering Duolingo, but a higher percentage are finding enough value in the app to pay for it. It's a strong signal that Duolingo isn't just popular, it's genuinely loved by its users. This kind of organic growth is rare in the tech world, and it speaks volumes about the quality of the product and the loyalty of its community. Financially, Duolingo is in a league of its own among high-growth tech companies. The company's revenue is growing at a blistering pace, between 40 and 50% year over year. Even more remarkable, Duolingo is already profitable, a rare achievement for a company scaling this quickly. Most tech startups burn cash for years before turning a profit, but Duolingo's efficient business model and strong brand have allowed it to buck that trend. This combination of rapid growth and profitability makes Duolingo a standout in the EdTech space. The opportunity ahead is enormous. The global online language learning market is already huge and expanding rapidly, driven by globalization, migration, and the rise of remote work. But Duolingo isn't just capturing existing demand, they're creating new demand by reaching casual learners who might never have considered picking up a new language before. By making learning fun and accessible, Duolingo is expanding the market and bringing education to people who were previously left out. And Duolingo isn't stopping at languages. The company is rapidly expanding into new subjects, including math, music, and even English proficiency testing for university admissions. Their math app aims to make learning numbers as engaging as learning Spanish, while their music app brings the joy of playing an instrument to your fingertips. The Duolingo English test, meanwhile, is already being accepted by thousands of universities worldwide as a reliable, affordable alternative to traditional standardized tests. Each of these new verticals represents a multi-billion-dollar opportunity, and Duolingo's platform gives them a huge head start. With a single update, Duolingo can launch a new product or subject to hundreds of millions of users instantly. This kind of distribution power is almost unheard of in education. It means that whenever Duolingo enters a new market, whether it's math, music, or something else, they can scale faster and more efficiently than almost any competitor. The company's ability to innovate and expand is a key reason why investors are so excited about its future. Another major advantage is Duolingo's massive dataset on how people learn. Every lesson, every mistake, every success is tracked and analyzed, allowing the company to constantly refine its algorithms and make the app more effective. This data-driven approach means that Duolingo can personalize lessons, adapt to each user's strengths and weaknesses, and keep learners engaged for longer. It's a virtuous cycle. Better data leads to a better product, which attracts more users, which generates even more data. This creates a powerful feedback loop. As the product improves, more people use it. As more people use it, the data gets richer. And as the data gets richer, the product gets even better. It's a self-reinforcing cycle that's difficult for competitors to replicate, and it's one of the reasons Duolingo continues to pull ahead in the EdTech race. At the helm of Duolingo is CEO Luis von Ahn, a true tech visionary. Before founding Duolingo, he invented CAPTCHA and reCAPTCHA, technologies that have protected billions of websites and helped digitize books. Now he's bringing that same spirit of innovation to education, building a company that's as mission-driven as it is profitable. Von Ahn's leadership and vision are a big part of what makes Duolingo special. He's not just building a business, he's building a movement. Of course, no investment is without risks. The EdTech space is crowded and competition is fierce. There are dozens of language apps and learning platforms vying for attention. But so far, no other app has matched Duolingo's scale, brand recognition, or product-led growth. The company's relentless focus on user experience and innovation has kept it ahead of the pack, and its massive user base gives it a significant moat. User churn, people dropping off after a few weeks or months, is always a concern in consumer apps. But Duolingo's relentless focus on engagement through features like streaks, reminders, and social sharing keeps people coming back. The company is constantly experimenting with new ways to motivate and retain users, from in-app events to personalized challenges. This ongoing innovation is key to maintaining growth and loyalty. Some investors worry about Duolingo's valuation, given its rapid rise and premium price tag. But when you look at the company's growth, profitability, and massive expansion potential, it's clear why the market is willing to pay up. Duolingo is not just a language app, it's a platform for lifelong learning, with opportunities to expand into countless new subjects and markets. The company's market cap has surged to $16.64 billion, driven by its gamified approach to education and a loyal user base. In 2024, Duolingo pulled in $748.02 million in revenue, impressive for a company that operates primarily through app-based subscriptions and language services. Its net income came in at $88.57 million, with an earnings per share of $2.14. However, the sky-high price-to-earnings ratio of 170.14 signals that investors are betting heavily on future growth, valuing Duolingo more as a high-potential tech disruptor than a traditional education company. Investing in Duolingo is more than just buying a stock, it's a bet on the future of education. It's a belief that technology can make learning more effective, more accessible, and more enjoyable for everyone, regardless of age, background, or location. As the world becomes more connected and the demand for new skills grows, Duolingo is perfectly positioned to lead the way. With the other half of your $500, you can own a piece of this educational revolution. Whether you're passionate about learning, excited by technology, or simply looking for a high-growth investment, Duolingo offers a compelling opportunity to participate in the transformation of global education. Between SMCI and Duol, you're investing in two of the most powerful trends shaping our future: artificial intelligence and educational technology. These companies are not just riding the wave, they're helping to create it. And as the world continues to change, they're poised to play a central role in how we work, learn, and grow. There you have it. Two smart growth stocks you can buy right now with just $500. Supermicro, a company at the forefront of powering the AI revolution with its cutting-edge server technology, and Duolingo, a leader in transforming education through its innovative language learning platform. Both of these companies are not only shaping their respective industries, but also offer exciting opportunities for investors looking to get in early on the next wave of technological advancement. Whether you're passionate about artificial intelligence or the future of digital education, these stocks could be a great addition to your portfolio. If you're eager to take your investing skills to the next level and make more informed decisions, I highly recommend checking out my Value Stocks Investing Master Course. This comprehensive course covers everything from the basics of value investing to advanced strategies used by top investors. You'll learn how to analyze companies, spot undervalued stocks, and build a portfolio designed for long-term growth. The link is in the description below. Don't miss out on this opportunity to boost your financial knowledge and confidence. For those who want even more, consider joining our Stocks Galore Patreon community. As a member, you'll get access to exclusive stock tips, in-depth research reports, and real-time trade alerts that can help you stay ahead of the market. Plus, you'll be part of a supportive group of like-minded investors, all working together to achieve their financial goals. Head over to patreon.com/stocksgalore to join us today. Now I want to hear from you. Between the explosive growth of AI hardware and the rapid evolution of EdTech, which trend excites you more? Are you more interested in the potential of artificial intelligence to reshape industries, or do you see the biggest opportunities in the world of online education and digital learning tools? Share your thoughts, and let's start a conversation. Let me know in the comments below, and if you found this video helpful, don't forget to hit the like button and subscribe to the channel for more investing insights and stock ideas. Your support helps us create more valuable content for you and the entire community. Thanks so much for watching, and I truly appreciate you being part of this journey. Stay curious, keep learning, and I'll see you in the next one.